So this is the nature of YouTube. So just retweet that what I just wrote.
Yeah. Okay.
Holy shit!
I've
This just
what
out
is-
now. BNP suspends head of forex trading.
Is this to do with the investigations?
I'm not sure. Just saw it now. So some people are coming back.
Okay, well, let me go back then to, I know it's still recording, it's a bit odd. Yeah, sorry, sorry. It's odd because we're actually promoting TED by doing that, but I guess whatever. It was a great video. I really wanted to show it.
You want to play it again?
Sorry?
Should we play it again? So what happened for the people that tuned out and all of a sudden got stopped? We violated some automatic copyright infringement system on YouTube. So I got 1 strike, and it's a 3 strike and you're out. So we're changing away from YouTube for things like this because it's very harsh, and you can't. Of course, we clearly rebroadcast it and live and learn.
It wouldn't matter that I got personal permission from the lady concerned. It's just an automated thing, so you know that's what happens. I guess, but it's a shame. It was a great talk she was giving on optimism bias, and what I wanted to do is show how some of the points she made applies very much to how we as traders have got to be careful about optimism bias. You know, in several respects. And the first respect is overestimating our ability because we've done really well. You've got to be very careful about riding for a fall. There's actually a really good quote from someone we talked about getting on, if he doesn't mind copyright, Stadelmeyer. You see,
by the way, we're being told that we hit stops, YouTube stops. Triggered a few stops here. Let's get back.
Peter Stadelmeyer's he's talking.
The greed one?
It's the greyish one.
No, greed, I mean.
Yeah. Do you want to read that out for me?
Mm-hmm.
Or I can if you want. Yeah, let me do it. If you find yourself holding a winning position, adding up your profits and confidently projecting larger gains on the horizon, you're probably better off exiting the trade. The odds are that the trade has run its course. Peter Stadelmeyer. And anyone who doesn't know Peter Stadelmeyer, he's the guy who invented market profile. You know what market profiling is? I think if we can get him on, it would be cool because it's to do with volume-related analysis, and I think it's a brilliant form of analysis. It forms part of a much wider approach to markets. I think, personally, I think we will see develop over the next few years. I talked about that before, how I think we're prehistoric and in dark ages, and I think some of the things he does is part of the enlightened ages. But there you go. Anyway, it forms part of the those people who stayed with us or were stopped out. It's part of the over exuberance, to getting too carried away with yourself. And the guy called Marty Schwartz has written a book years ago called Pitbull. I'm reading again at the moment. In fact, you can see some of the. I always make notes on books. I don't know if you can see that, but there's a great passage, 1-page passage called "Mashed Potatoes," and he's had a really good run, and he's up 10,000, and he starts singing "Mashed Potatoes" and dancing in the close because he's cock a hoot, and yet he hasn't taken his profit, hasn't booked it. It's only profit on paper, and because he's so cock a hoot, he doesn't close his position. And because I've been dancing instead of closing up my position, I was locked in. And I lost the whole $10,000 profit. From then on, I always fought the temptation to start dancing before I heard the cash register ring. Yeah. When you feel like doing the mashed potatoes.
What is the mashed potatoes?
Well, I can't do that, can I? Mashed potatoes was a song of the time, and people, there was a mashed potato dance, and people used to do this dance. You still see American footballers do it. Because it's kind of a rolling dance.
Can you stand up and do it?
Can I? No, I can't.
Dance monkey, dance.
Well, I should be doing, because it's kind of slightly how I actually was thinking of taking some of my DAX long out, because I'm just in danger of being a little bit over exuberant. But you
do
say
you
that
think
when you
there's a
feel like doing the
bias?
mashed potato dance, it's a visceral clue that
Yeah.
you've lost your objectivity.
But
You've
that's
gone
interesting. Your DAX position. We know a lot about your DAX position because you talk about it a lot. Do you think it's dangerous to fall in love with something like you have to a certain extent with the DAX position?
Um, yes, no. And this is where I really, I do want to head with this. I want to head with, reach two conclusion points. One is awareness at all times of what you're doing. When you do the mashed potato dance, you're no longer aware. Yeah, you're getting off on one, and you should be to closing your position. You've broken out of what you expected to do. So the other thing about awareness is anticipation. If you can anticipate what you think may happen or should happen and what type of market it will be and circumstances, good or bad, then you're halfway there to acting far more rationally and ably when it happens, good or bad.
Yeah.
So to answer your question on the DAX, do you want to put up the DAX chart? Which DAX chart have you got? Yeah, let's do this something. I want to show it's the daily chart on the DAX. I haven't shown this before.
I'm not sure which one that is.
It's called Daily DAX.
Oh yeah, that's the one I have.
As a clue.
No, it doesn't look familiar. Basically,
No,
what
it wouldn't
the
look
charts have
familiar
we
because
been?
we haven't showed it. People
So the
ask me.
15-minute we've seen.
Sorry.
What's the one we've seen?
That's the hourly as an extended hourly chart from last December. You can see that I was saying that the price action will repeat itself. People will say, why do you give everything away? I don't give everything away by any stretch of the imagination. So sometimes I may appear very confident about something that appears quite good, but not overly special. Sometimes I have more special reasons for thinking something, but that's all part of my trading plan and program than what I choose to give away. But the DAX has been repeating itself, and part of the tweet I sent out for this show was about optimism bias. And if you looked at a bigger picture view, you see the DAX. Actually, flip back. There's a dark chart there of VDAX. Can you put that out? It's got no, not that one. That's the one we're just looking at. It's no, not that one. It's the one with black and white, dark at the bottom. That one, which we have seen before, showing how volatility is an indication that the DAX is breaking what is a very big, long range, and it's broken. And so, you get your chart and say, wow, look at that. We're talking a significant move. We're talking 14,000, levels like that, moon pig levels, and let's get really stupid about it. Optimism bias, yeah?
Yeah.
Sometimes there's reasons, good reasons. If you were to look at the long-term 200-year chart or whatever, 100-year chart plus on the Dow, if you've been really stupidly bullish. I remember people saying that when the Dow was going to 10,000, when it was driven by Microsoft.
It's a dual listing, right?
10,000 was stupid, and yet now we're 16,000, and it's still stupid. So sometimes it's right. So provided you have reasons for optimism and you can justify it rationally and you're consistent, then there's no problem at all about being optimistic. And if you go back to talking about the DAX, can I just go back to that chart I was talking about? I didn't really want to get into that. The volatility play is a volatility fractal as well. I was saying basically the DAX was going much higher. It's broken down about 14,000, quite frankly. Again, that is a bit silly. That would be guilty. I rein myself in from optimism bias, even though I know the Dow, the equivalent of 1929, says it goes to 22,000. That's a little bit silly. So I try and rein it in, and I'm, okay, I might continue to trade it on the basis it's going there, but my mindset is not 22,000 because I don't want to trap myself into be overly optimistic. But if you go back to that daily chart, I want to show people exactly where I'm coming from, and on the DAX rather. And I use this as the thing for optimism bias. I did something very similar on the Dow. You can see it's repeating itself, and we're in the green. Well, it's actually a light blue box here. And if you go, I haven't got the chart, but if you look at number 2 lower down.
No, I think we have the Dow Jones Mandelbrot. Is that the one?
No, it's fine. This is the right chart I wanted to show. It's very similar to the DAX Mandelbrot chart, which and begs the question: maybe the DAX is in a funny same position. Maybe the Dow is leading the DAX. I don't know. I don't
But
really
can
need
you
to address.
explain this? Because
Just let me finish this story before you take it on. What it's saying is we should break out of this box into the blue circle as a holding position. So it breaks to new highs. People, it's broken to new highs. Moon pig, it doesn't go. And then holds and holds and holds, and then it could go. Sterling yen did something identical, very similar to this type of price action before it went big time on the upside, and then it stopped, and then it did something again very similar. So there are templates out there for this type of market, and if you look at the black chart that you did put up, that you shouldn't have put up, but you can put up. No, not that one.
Jesus, you're
okay. Right. What it's saying is quite clearly the DAX has only 3 or 4 patterns it seems to be following. This is one of them. This is the pattern, the correction that we just followed. This is the same as the DAX Mandelbrot that we've been following. That's basically saying that it should take out stocks before 9,500. There are a couple of precedents in history when it went further than the marginal spike, and this is one of them. In fact, it's last August. And then you can see that it broke down and it ramped higher. And this is the difficulty. The DAX Mandelbrot I've been following says it goes straight up, it maintains momentum. That precedent says it can afford to consolidate. So that's why I'm saying, okay, I'm looking for new highs. I'm getting really stupidly bullish, 14,000. Here we go. I'm holding there. Jesse Livermore, there's a quote you've got there of him, of Jesse Livermore actually saying, I've used this quote many a time, it's one of his best quotes ever, about saying you make money by sitting with a position, not doing anything, just sitting. It was never my thinking that made the big money, it was always my sitting. I don't know if you got that with him sitting down.
100 Jesse Livermore, so yeah, there we go.
But it's a brilliant quote. It was never my thinking that made the big money for me, it was always my sitting. Okay, what this is saying is, on the one hand, he's saying, hold it, it's going to the moon. Hold it, hold it, hold it. On the other hand, don't be silly, don't be over-optimistic. How? They're obviously in conflict. How can you reconcile that? You can reconcile it very easily, in that I have reasons to believe, very strong reasons to believe, following the Schiller PEs and everything else, the Dow's in a major 1980-28 style, blah, blah. The DAX has broken a significantly long range to the upside. It's pulling back, holding, it's correcting. Really strong reasons to believe it's going much higher.
Yeah.
And so I can maintain along the reasons, as long as the information I receive. You want to put up another Jesse Livermore with him facing to the right. It's quite a long piece, so maybe I should read it all out. But basically, as long as I keep listening to the tape, as long as I keep taking the information in, then I don't need to get overly exuberant and start to twist the information I get coming in. I can maintain a very sort of position. What he said was the unsuccessful investor is best friend with hope. And hope skips along life's path hand in hand with greed when it comes to the stock market. Once the stock trade is entered, hope springs to life. But my point is that you have hope beforehand because you have a target. Yeah. And therefore, hope doesn't suddenly spring to life. I'm hopeful, I'm optimistic because that's how we work. But I'm also recognizing that, this is a trade. It could go wrong. He says himself, it's human nature to be positive, to hope for the best. Hope is an important survival technique. Yeah, otherwise we wouldn't get up in the morning. But hope, like the stock market, cousins, ignorance, greed, and fear distorts reason. Yeah. So be optimistic, be hopeful, have your targets, even if they're aggressive, but you've got to have good reason for them. Don't let it distort the reason. See, the stock market only deals in facts, he says, in reality, in reason, and the stock market is never wrong. Traders are wrong. Like the spinning of a roulette wheel, the little black ball tells the final outcome, not greed, fear, or hope. The result is objective and final with no appeal. It's a brilliant quote and passage from Jesse Livermore. It's very eloquent as well. But what he's saying is it's fine to have hope, as long as you maintain your rationality, as long as you maintain the reasons. And that's the point. That's the point. Is I am very bullish on the stock market. I'm bullish on the Aussie, and it's working my favor. But I'm not adjusting my targets because it's gone up. I'm not. Yeah. It's gone to new highs. I'm fighting bearish. It breaks to new highs. I'm buying, and now suddenly I'm no longer mega bearish. I'm mega bullish, as you see time and time again from people. I'm maintaining the consistency because I'm trading from strength. I'm analyzing from strength. I'm flipping on quotes on you here, and I put up Bernard Baruch, if you could. There's a quote we've used before from him. He says, "Consider and reconsider the facts and your opinions. Stubbornness as to opinions, cockiness, in other words, must be entirely eliminated." In other words, fire, 14,000, but if the information, the reasons for my trade, the reasons for my analysis are being changed.
Yeah. I have one for you. I have one for you.
Let me just
in terms of cockiness.
Go back to Monday.
Remember when we said this morning that everything was back up and everything was working fine? Yeah. We're having issues with the stream now, so we're going to put out the recording as soon as possible. So we're going to just continue, but the stream keeps skipping off. It's likely the internet, the way we set it up now. Just so you know.
To do if we're not being stopped out again.
We're being stopped out, but in a different way. It looks like it's just basic internet. So, but we're recording everything and we're going to put everything up normally. So, but it's interesting. It's like never be cocky, even when live streaming.
Well, exactly. I mean, it's this kind of poetic justice going on here. Being
really
cocky and being one reason for being optimistic is things go in the right direction. We're having a bit of a nightmare, self-inflicted in some senses by whatever reason, not preparing well enough and maybe overplaying something that shouldn't have been played technically. But there you go. Yeah. But the point I wanted to make is on Monday, you reconsider the facts. I had a very very clear game plan for trading the DAX and also the Aussie. But I was also aware that I was facing political risk. So I needed to reconsider what was going on in the Ukraine. One of the reasons for doing the show on Monday the way we did it was so I myself could address the issues, the risks, as to what was going on. I wasn't going to be cocky about it. I was not going to be stubborn. I was actually going to consider squaring up or significantly reducing the position if I felt there was greater risk than appeared or I couldn't control the risk. Yeah. And one reason for doing that, as a result of considering and reconsidering, I decided to move into the lower beta trades, the Euro Aussie and Sterling Aussie. Can you show my, hang on one second before you do that. Can you show my screen? You able to do that?
Well, it's Twitter now.
No, it shouldn't be Twitter.
Yes, it is.
No, there's
it's like a bunch of DMs and.
No, you're not good.
That's your second one. I'm not going to show it because you have DMs on it, but.
No. You should have the writers up. So there's something wrong. I don't even have tweet back up. So is it frozen?
That could be.
It's the internet again. It's frozen on it. But
yeah, it might be. We're running all the internet because we now have the wires, so it might be the issue. But it shouldn't, because we're having a stable connection. So.
Okay, well, go back. Put up the Euro Aussie chart. Put up before. It's 2006 chart.
It's from the past, right?
Yeah. It's one I put up before.
See, we're being hit from right and left. Euro Aussie. Let's see. 602. Is it this one?
Yes. Yeah, that's it. Yeah, basically I was saying this is a previous chart from back last year, saying that it would be supported, have another run at the highs, and now let me know if and when you get my screen back up and running so you get the charts in front so I can show a live chart. But basically what it's saying is this market is going to come down 10%. Yeah. And I was arguing it's a low on Tuesday, a low beta trade, and therefore it was an opportunity because of the risk to trade that. And as a consequence, I was going to trade it in two ways. One, I was going to, in fact, we got a chart from yesterday. I don't know how easy it is for you to pick out the chart from yesterday. Euro, Aussie, hourly. I can always give it to you. Do you want me to post it to you, or is it easier, or can you pick it up from yesterday?
Oh, yesterday. The hourly, yes, it probably is here.
It should be fairly easy. But basically, what I was saying is I've started selling it. I've started selling Euro Aussie itself, but I've also started legging in via the Aussie dollar. I was buying the Aussie dollar with effectively an average of 89.10, looking for higher in the Aussie dollar's case for its own sake. But what I was trying to, the reason for doing this was I was trying to minimize the risk. In other words, what I was trying to do is create a synthetic trade by legging into the Aussie, looking eventually to turn that long Aussie position into a short Euro Aussie position.
Yeah.
That I could actually be short Euro Aussie by locking in the Aussie dollar profit, and I could keep a stop loss break even above the high. The high was 155. So basically, I'm looking for a rally in the euro now, which to sell without giving too much away. I run a service has been talking about the levels we've been looking for back up on.
Is this the right one, by the way?
Yeah, that's the right one. Basically, looking for the start of a 10% movement down, but being long at being long Aussie dollar at 89.10 as an effective average. All I was looking for is, and I've been filled this morning.
Yeah. Do you want to hear something? I have a theory on. Do you look at the yen now? Right now?
Yeah, it's breaking. Euro yen is breaking high as well.
Yeah, it's above previous tops here.
Well, short term, actually, yeah. This is a bit of 85 is a bit of a level.
Do you know who's trading that?
Who?
Zero Hedge. It's bleedingly obvious. He's commenting on tick by tick.
I know.
It's very annoying.
He's got a lot of strength. In fact, it's just jumping.
Yeah, it's NFP that's sending it up, of course.
Yeah.
Initial claims beat 323. Very small beat though.
Yeah.
It's interesting to watch.
Well, there's going to be taking out stops.
It's going to take out 103.
Stopped out in front of the NFP already because dollar yen's higher. Yeah. Euro yen's broken to new highs, or 141.25. Can you hear me, Sverre?
Yeah, I can hear you fine.
Okay, sounds like you can't. And the Aussie's 90.55. You know, the big move in the last 24, 48 hours has actually been Aussie yen. Yeah. But the reason I'm not trading Aussie yen as such is two reasons. One is that it's much more correlated to risk conceptually as well as Euro Aussie. Yen being one of the clear vehicles you want to be short yen if you want to be if it's risk appetite, and long yen risk aversion. Yeah. And so that's too closely associated with Ukraine, in my opinion. So didn't pick on Aussie yen, but rather Euro Aussie. And Euro Aussie is, if I can get, I've been filled already, so I'm now effectively with an average that is below is better than 155, the recent high. So I can now put a stop in. That should, I think it's above the recent high now. I've been filled at 37.60. So basically, going back to the point earlier in the week, by looking at other markets, non-Ukraine risk markets, it's actually paid dividends by legging. And I've also done it in a strategy to leg into Euro Aussie for a 10% move to the downside via the Aussie dollar. So I don't actually, obviously I do care what both do, but now I've got a Euro Aussie position, still got some Aussie, but it's kind of working well. And it enables me also to step back and not get cock a hoop and maintain some disciplined approach to all my trades rather than just get overly excited about one or two. It's going to be interesting today, though, Sverre, because I've long argued that the real blowout in the stock market to the upside, we're not in 1929 territory, but we're in a blowout that's going to precede a 1929 territory, that once the Dow breaks to new highs, will be up and running. We'll see all the other markets start to kick in. big time. And yes, you will get silly levels talked about on the DAX. But it's interesting because one of the things in the shorter term I was looking for to trigger the follow through on the upside was Euro Yen above 41.25. It's been stuck below the 141.20 or the 50-day moving average. I don't normally get off of moving averages necessarily, but this baby has been stuck below something. I was trying to find out what it is, and it is in fact the 50-day moving average, and it's now above it. So it's going to be really interesting if it can close above it. Basically close above 41.25, because it will be up and running to the upside, which is good and bad because I'm long of it, but I don't have enough of it.
Am I right in saying that the 50-day is 141.29 now?
Yeah,
It's a big move. It's fun to watch yen on days like these.
It's going big time, isn't it?
Yeah, look at that. That's a gap and then another. So tick. Well, tick by tick is not going to look good. Yeah, it's best view here. So I'm just keeping it on screen, so if you want to reference it. If you want to reference any of the other ones, just let me know.
Yeah, actually, it's fun.
So the 50-day moving average is the key here?
I don't think it's the key. As I said before, I don't get off on moving averages. I made the point before that you can use this, as long as your system shows that it makes you money, then it doesn't really matter what system it is. You just follow it. Yeah, you don't need to justify it to people who say it's rubbish.
But don't you think a moving average is sort of the average of the world? You know what I mean? Isn't that why moving averages are important?
I don't know. It's not my style. I mean, Marty Schwartz is a moving average guy. If it's above the 10-day exponential moving average, he's a buyer. If it's below, he's a seller. Sounds like a recipe for disaster, quite frankly. But but there is, I think, more importantly, as people see it above a moving average, it tends to be a sentiment indicator, like the 50-day and the 200-day moving averages for people, particularly on the S&P. They look at them as an indicator. So as it's above it, then people will be bullish.
Yeah.
I think that.
So it's like a self-fulfilling prophecy almost?
Yeah. To some extent. But then it's also what's the opposite of self-fulfilling?
Like a feedback loop almost?
Self-destructing policy, that you have your stops below it, and it is going to stop below it quite clearly and does and messes around it as well, and you don't know. Begs the question. For me, I don't like to beg questions. I don't want to beg questions. But it doesn't matter. If you use moving averages and you make money out of it, tell people sort of undying if they tell you not to use it, because that's how you make your money. So consistency.
Would you trade the Euro Yen right now?
Sorry?
Would you trade Euro Yen right now? I'm sorry, I'm a little bit transfixed by the chart now. Would you trade this at this? I have.
I've just bought Euro Yen. Yeah.
Oh, you made money then.
But I'm also long already. Yeah. But I've just bought into it.
Do you prefer to trade Euro Yen over dollar yen, or is that interchangeable? Oof! Look at this.
Well, on the day there it's Euro Yen, and on the further out it's dollar yen. The euro has just popped up 30 points. Yeah, someone's going after Euro Yen big time.
Yeah, look at this.
It's 42.15. It's real mileage.
It's almost a figure move. NFP.
Well, Euro Yen is up over 100 points on this number. Another interesting market. The market had done a bit.
Oh, look at the DAX. What the hell is going on? My broker here is just saying that the German market is collapsing here. Look at this. From 57 to 53 in a second.
What? What are you talking about?
No, just look at the DAX here.
Where do you have the DAX?
It's on the screen.
What level do you have the DAX at?
95.36 right now.
Okay.
I don't know, it was just a big move. Like all of a sudden.
No.
No?
No.
Okay. Then, yeah, it's just sorry we're getting off. But I really like, you know what I liked a lot? When we saw you, the way you did your analysis, when you did it on screen, when you did your levels and the way you think, that I really liked. That was like really educational for me. Just the way you
the way I do things, maybe.
Yeah.
It's interesting, isn't it? The euro. There's a precedent for this in the euro. I cited it in the video yesterday, a day fairly recently when it's done some very, very similar price action.
You made a face there. What made you make the face?
Yeah, I have apparently a quite expressive face.
Oh, that was the. I mean,
I was looking. Well, I'm just looking at euro and cable.
Yeah.
Without giving too much away. Again, anyone who follows the stuff I put out on marketvisiontv.com will know that I have well, cable is bizarre by nature, but I would say I do have a bizarre view on cable. I'm just kind of more pain, I think, because I think it's quite a pain scenario for people. But it's interesting about the euro as well. It's very strong on a Friday. You wonder if it's going to fade. It's interesting. Euro sterling's an interesting baby as well, because if there's ever a market to go after stops, it's euro sterling. Now the DAX is all over the place. Yeah. Okay. Right, back to what we were talking about, optimism bias. If you go back to that slide, the slide we started off on.
The 4-1.
Yeah, the 4.1. Basically, that there are the four areas where over optimism can hit you hard. You can see that I've got my mind and my eyes on about 10 different things.
Yeah, no, I like it. I mean, where the stream is basically down, I don't know what's happening. So it could be YouTube, it could be anything. But watching you work like this, it's almost that's kind of where we want to take. I mean, we're going to put the recording up anyway, so that's fine. But watching you look at the markets now as it's happening, I think this might be a better time for the show. By the way, closer to the U.S. Open. I don't know. You suggested it. Maybe
well,
that's.
I think I've made a point about it should be in 2 slots. This is an important slot.
Yeah.
It's interesting. What's hit? Have you got my screen? What's
still not showing now?
Can you see my screen or not?
No. Well, I see the Twitter.
Oh, it's not there. It's not Twitter. Is it my screen? Is it Twitter not moving? The 4 points we're talking about, optimism bias, is there is a risk that when things go well that you overestimate your own ability. Stay human. I mean, it's ironic because we're human that we overestimate our ability, but stay grounded.
Yeah.
Don't run before you can walk. Trading is a slow, long-term prospect. If you want it to be a long-term prospect, you need to do it slowly, not overnight. And therefore, just always be measured in what you're doing. And then, if you do that, you'll be able to far more reasonable, rational approach to things. So you'll be able to estimate your risk properly and be disciplined, and therefore you will not be so confronted by pain through market going wrong, and therefore completely throwing a wobbly and breaking your rules and your discipline.
Yeah.
Part of that process within being optimistic or not overly optimistic is still analyzing the data you see. Analyze it objectively. Yeah, don't say, go back to the point about confirmation bias. When you see information coming in, don't just try and skew it to fit your book. The market, as Jesse Livermore says, is never wrong. It's traders who are wrong. So, and the point made by Bernard Baruch, keep analyzing, filtering the information. Is that consistent? Is that inconsistent?
Yeah.
Be impassionate about it. And when, it's all right. Last point about getting stupid. You wish, you're just holding, you're long, and it's working and it's going up, and then suddenly it's no longer going to this level, it's going right up there because it's bid to old boots. It must be about to explode. I'm going to sit there and not take my profit. If you're supposed to take your profit, take your profit. And the point we made when we talked about greed is that you've got a game plan, stick to your game plan. It doesn't matter. People wonder why, why are you taking your profit, your position out here? And it's because that's my game plan. That's how I make money, by sticking to my game plan. I don't make money by getting over caught up in the moment and finding that, yes, sometimes it works and other times it doesn't work. I find that, more times than not, that it doesn't work. So stick to the game plan. So don't overestimate or shift your targets. Don't not exit a trade because it's going well. But the way you do that is to be aware of all these issues. And it's the self-awareness. We don't hear traders or people talking about self-awareness enough. When you're trading, you are trading a market, trading your capital. But capital isn't just money, it's also emotional, human capital. You are trading yourself as well.
Yeah.
So it's interesting that you're saying you're watching me look at a market. It's not just the market, it's I'm trading myself. You're watching me go through a series of thought processes that's going over and over again. I'm seeing, just on a day like today, I'm watching, I'm obviously watching DAX all over the place, but I'm actually also watching Euro Sterling that doesn't normally move, but it's suddenly very, very perky. And the question is, well, am I going to buy into? I very rarely buy breaks intraday. I bought Euro Yen intraday today. It's up 100 points. I'm on the verge of buying Euro Sterling. That's going to be a tough one. Feels like it's a Friday as well. Feels
But
like a Friday market.
how do you respond now when you see the Euro Yen break above? I can share the chart here on screen as well. When it breaks above like this, it's a very tricky one.
Well, one thing you shouldn't do is fade it. Yeah, I mean, it's just no
shouldn't fade
point in fading. I'm bullish anyway. People know I'm bullish. Yeah, I mean, it's a risk currency. It's a high beta. It's been a not so high beta currency pair in recent times. It's high risk appetite. People buy the euro, sell the yen when it's risk on, and so I am of that view generally, and therefore so I'm bullish and long euro yen, but I'm not long enough, which wasn't long enough. Still probably not long enough, but there's a limit to how much I'll buy intraday. But this is obviously now it's gone 100 points. How I react, there's always a risk, particularly on a number that it's false. And so it goes like 141, 41.40 bid, and then comes back down below 141
now.
figure. Oof. Sorry?
34 now.
Yeah. Now it's 130 points. It's fairly easy, no-brainer to say that it's a genuine break. And I've got an equality target at the very least. I'm bullish beyond it, but 43.70. So this has got a lot to do. It's got a lot of traction on it. And so what do I do now? What does one do? I wouldn't fade it at all.
But do you scale out or?
I will scale out at 43.70 is my first target. I do things in
really?
Matching probability. So what I do now, Sverre, is if it does start to trickle back down over the next 45 minutes or so, is I will buy a dip. Let's say, I'll tell you where, but I will be buying it against that previous 41.25 high, because this is a genuine break with momentum. If it's right, it's going to maintain momentum. If it's going to maintain momentum, it's not going to go back below 41.25. And so I'll add in a third again. What I did was buy the break. I was long into it. I bought the break, and now I'm looking for a dip to add a third. So I kind of, for me, it's like a no-lose situation at the moment, in that I think it will come back down to 41.90. 95 around there, and I'll try to pick it up, maybe a tad low just to confuse people, but I don't expect it to get back below 41.40, 41.35 now. And so that's the play on the rest of the day. Now this is again is a risk currency, high beta, and therefore is it saying something about the stock markets when New York opens in 45 minutes? And
well, I mean, this is clearly reacting to GDP targets by ECB now, combined with American figures. So, I mean, it's based upon real stuff here.
where do you have the DAX? I don't know if it seems a bit weird the way it's trading. I don't know if that's my system or
Down.
I know it's down. Yeah, it's kind of a bit dangerous, isn't it? Short term. It's interesting. You just wonder. I wonder what New York's going to do because the Dow's been to new highs overnight, and therefore.
But you trade Dow futures, right?
Yeah.
I never understood. Is that because it's a smaller lot size? Is that it, or?
No, it's got nothing to do with lot size. It's a 24-hour market.
Yeah, but why Dow? Why not S&P?
Oh, you asked me that before, and it's purely to do with the technical clarity.
Okay.
I prefer the Dow; just appears to be clearer. Although saying that, and the point I made previously is for the last 6 months, the S&P has been clearer. It's just, and now it becomes history. It's just habit as to why I trade it. But yeah, it looks like it's a false break. So it'll be interesting to see what the Dow does into. I suspect today is going to be a nothing day, and we're going to trade back down.
Yeah.
Which is odd, which means we've got divergence on the divergence with the yen crosses. And the odd, it's interesting because the yen crosses have been a little bit out of kilter, a little bit out of sync in recent times with the nature of the risk, because obviously the DAX is the one that's moving. The euro is well bid.
Yeah. But I like this. This is fun. We should do this more. So we're moving slowly more to real-time analysis, real-time reactions. Maybe this is a better time slot with more stuff happening. Always a macro number, always a little bit of a... What do you think? You suggested the time.
Oh, I think, yeah, but there's several issues as to what is the right time.
Yeah, I know.
You're going to talk about markets moving. I mean, the way we've set things up, the way we're going to end up, we will be in active times, active slots, because it's the nature of what we want to do.
Yeah.
What we've been doing is, been like a webinar talking about concepts. We don't really need or want to be in active time slots. Now, you're not trading it, so you might get off on the excitement of a market moving or not. I've got positions I need to think about, and so I'm trying to do 2 or 3 things at once.
Yeah, I understand.
So that makes it harder. So when it comes to talking about things like optimism bias, it's better to do that in a quieter time. And when it comes to markets, like right here and now, markets moving and make it interesting, today would have been a classic time to do our end game where we think we should be.
Yeah.
That's the time to do that type of thing. So there's your answer.
Yeah.
When we haven't reached the setup we want to be at, then I think we should be earlier, and then later, then I think we should be later.
Yeah.
So that's basically where I think we are. I'm really disappointed in today's show, the chop and change with copyright stuff and
yeah, but that's I mean, we have to go through all of that.
I hate that.
No, but we're moving. We have a couple of changes to do because we want control over all the stuff, and so we have some changes where nobody can take us down, basically. So that's where we want to be, and want to have much more control over the whole setup. We're going to bring in a chat room kind of a thing. So we want instant feedback from loyal viewers. We don't want to use Twitter as much. I don't like Twitter like this. So that's kind of the direction we're taking that. And we're building a new website. The studio now was literally built between 9 and noon today. So, of course, some stuff is not going to be, and the internet is not hooked up.
Yeah, well,
correct.
we shouldn't perhaps have done the show today, yeah?
Nah, maybe.
Yeah, but that's a lesson learned.
Yeah,
it's not, without wishing to sound rude, it's not a maybe. These are lessons that we need to learn.
Yeah, but this is our final stop. And everything we're doing now is final stop stuff.
There's going to be changes and improvements in technology. We're going to have similar issues over and over again. We just need a better sense of what and how we should do things.
Yeah.
An optimism bias. Yeah, you are a naturally optimistic guy, which is good. It's
That's
positive,
why you start something like this.
Yeah, but when when it means that you think we're going to get the stuff done by 11, then let's be realistic and say, well, it may not be done by 11. There's contingency timing. Let's aim for another time. I mean, that's the same thing. Is she? What's her name again? I'm going to call her Tarek Ali for some reason, which is funny. She was saying about the more realistic person is one who's slightly depressed, and I wouldn't want you to be slightly depressed, but
as an entrepreneur, if you're slightly depressed, you're underperforming significantly.
Yeah, I mean, you just don't want to be there. You want to be up and positive and go get around and achieve it. So from a point of view of what we're doing, I think, I think we're right, very right to be optimistic, but we just need to be a bit realistic sometimes and what we can achieve and make sure that we give it goes out absolutely as we want it to do.
Yeah.
So
anyway, no, we had some technical issues, but that's, I mean, all things considering, we're up and running, and we should be 100% by the same time tomorrow. But sadly, we're maybe at 90.
Yeah.
And it's fitting that we talked about optimism, because that's really what it is.
Well, let's finish then, because let's finish on one really good quote, because I'll wrap it up in terms of what we try to achieve today and discuss is the nature of optimism. We are naturally optimistic, overly optimistic, but it's good to be optimistic in a human and also from a trading point of view. If you want to achieve things and be strong when you need goals and not beat yourself up, but you do need to be realistic, and therefore you need to make sure and be aware all the time, is what you're doing the right thing? Does it tie in with your predestined, your predetermined plans? Yeah, and if it is, then you carry on in the same vein, being continually aware, not getting overly excited, not getting depressed about things either, because you know that if you carry on with your approach, you'll be here tomorrow. And there's one of the most brilliant, there's a couple of brilliant quotes that we've used today already. The Jesse Livermore one is an amazing one about the roulette wheel and everything else, very eloquent. But there's another great quote, the Winston Churchill quote. Yeah. And if you put that up, because I think that is the human condition. That is what we need to be as traders, but we need to be aware at all times of what we're going through and what the market's going through, and make sure that we keep sane and realistic and human. The pessimist sees the difficulty in every opportunity. The optimist sees the opportunity in every difficulty.
Yeah.
And we need to be optimistic, and not just from a trading point of view, but also on BIGtv. I think some of the things we're doing, it's getting there, and it's going to take a little while.
Yeah, we're also pushing the limit. I mean, you have to understand what we're doing here. Today, it became bleedingly obvious because of technical issues, but pushing the limit is you have to have some you got to break some eggs, and I guess that's what we're doing. But it's funny you should bring up that Churchill quote. Sorry. Because he was kind of a pessimist, wasn't he? I mean, at least depressed, like we talked about before.
I tell you, another lesson learned, Sverre, is if you notice, I will, all the shows we've done today, I have closed them about 3 times.
Oh, I'm sorry.
And you come back, and it's fine. I don't mind. It doesn't matter. I just, it's my nature to be tight in, start strong, finish strong, done, bang, sealed it. I'm not happy. It's funny because I've gone from being, this is a classic, isn't it? I've been from very optimistic and bullish and things like, things cool. And we got real, if we've ever had any problems on any one show, it's been today. So that's kind of irony for you. But one thing I do is I like to close. And then you kind of closed it, and then I've left it there about the Churchill quote, let's be positive and move on.
Yeah.
And, see these things as opportunities.
Let's do the Wayback Machine.
And then you don't let me kill it. You don't let me nail it. Yes, he was. Again, I think I've talked about this with somebody before about, he's called it the black dog. He had fits of depression and worked through them. But, he's a great man. Yeah. And maybe because of his fits of depression that he was realistic, in times of going before war, fighting the appeasement campaign. That may be one reason why. Yeah. But he was a realist. So we need to keep our head on our shoulders and be realistic about what we do. Yeah. And then life's much easier. Just so I can unwind my clothes as well. I just such a shame we didn't do the mashed potatoes. I was so looking forward to doing the mashed potatoes. I'm gonna tweet it instead because
Yeah, tweet it. Nobody can touch you on Twitter.
oh, I'm sure they can. There's
Okay.
plenty of copyright on Twitter. Right, young man.
Yeah, it was interesting.
I'm disappointed.
Yeah,
Dis-
but it's the way it is.
yeah, that's very is that Norwegian?
What?
Is that well, that's very stoical. That's very that's life.
Oh yeah.
Stuff happens, and that's kind of more like a
No, but you have to
South
go. You have
South
to roll
European,
with the
isn't it?
blow. I mean, you can't walk into a punch. You have to roll with it. Because if you roll with it, then you don't get knocked out. If you walk into the first punch, then you're over. The match is over. So yeah, for me, I mean, like nailing it on the button, that didn't even occur to me. So I know what you mean, because this is so conversational, this show. So it's but yeah, you're right. We should nail it on the button, and that's fine. It's like, then I roll with that punch. Then we have a complete outage, and I roll with that punch. And I know there's another day, and we're still ramping up, so it's fine to have down days.
Yeah, maybe. I'm not fine with it, but
No, but I
it's
mean, it's like you can't deal with it when you have a YouTube issue. I mean, it could be YouTube that's the problem. So it's totally out of my control here. So yeah,
yeah.
that's why we record everything and own everything.
Yeah. Okay.
Insert Churchill quote here. So I turn
Yes.
off the recording. There is literally no one watching the stream at the moment, because I don't know what happened.